Think about Rakesh Jhunjhunwala, one of India's most celebrated investors. People followed his stock picks, studied his interviews, and tried to copy his portfolio. But very few people studied how he actually structured his wealth.
And this is exactly where salaried couples like us miss out and end up overpaying taxes, simply because we assume that such structuring is only for wealthy business families.
One of the most powerful tools in the structuring playbook is HUF. HUF stands for Hindu Undivided Family. Your family gets its own PAN, its own income, and its own tax slab.
In this video, we'll cover everything from scratch. What is HUF, who can form it, how to build its own corpus, and how to set it up. HUF has been in Indian tax law for the past 60 years. The Income Tax Department treats HUF as a separate legal entity, just like you as an individual.
Let me make this concrete with our own example. So we have about 12 lakh as FDs as our emergency fund. Now this generates about 80 to 85,000 interest every single year. In our personal names, that would have been taxed at 30%. Around 24 to 25,000 gone every single year on money that's just sitting there.
Same FD, same amount, moved to HUF completely tax-free because HUF gets its own exemption limit just like you get as an individual.
The moment you have a valid Hindu marriage, an HUF automatically comes into existence. No ancestral property, no government form, no application, just the marriage. And this applies to Hindus, Jains, Sikhs and Buddhists, all communities governed by the Hindu Succession Act.
Now within the HUF, there are three different roles: Karta, members and Coparceners. These terms will come up frequently in the video, so let's understand them clearly. Karta is the head of the HUF, the person who manages it, signs the documents, operates the bank accounts, make investment decisions and file the returns. Think of Karta as the CEO of the family entity. Members are everyone in the family: Karta, spouse, children, daughter-in-law. They benefit from the HUF income but don't have automatic ownership in its property. Co-partners are a specific subset of the members with birthright ownership in HUF property. Since the Hindu Succession Amendment of 2005, daughters are now full co-partners having equal rights as sons. Co-partners have a major say in the decisions about HUF property, and also the Karta rights transfer through the co-partnery line.
The standard case is straightforward. Husband is Karta, spouse is member and children are co-partners. But there is one situation we specifically want to address as it has been asked to us multiple times. What if the husband passes away or a divorce has occurred? In that situation, the HUF can still be set up. The female, as the senior most member of the family, can become the Karta of the HUF with kids as co-partners. There are 4 clean legal ways to build corpus for HUF.
First, members can lend their personal money to the HUF. HUF can invest it and earn its own income. The loans can be repaid whenever the member wants. This is the most practical route salaried couples like us can use.
We'll share more details on this in the next video. Subscribe to our channel so that you don't miss this.
Second, a gift from the member. Under section 56, subclause 2, gift from the members are tax-free in the hands of the HUF. One important nuance: income earned by the HUF on that gifted amount is clubbed back to that member's income. Not a very tax efficient solution for the salaried couples.
However, income earned on that income, that is a second order income, does not get clubbed. It stays permanently with the HUF.
Third, ancestral property and valuables. Land, house, jewelry, anything coming down the family line can be brought formally under the HUF. Fourth, gift from third parties outside the family. These are also clean. No clubbing provisions apply. The only threshold to note, gifts from non-members above 50,000 per year are taxed in the hands of HUF as income from other sources. You just need three things to create an HUF: a deed, a PAN card and a bank account, in that order.
Step 1. The HUF deed. HUF deed is simply a document on stamp paper that formally declares the existence of HUF. It names the Karta and lists the members and co-partners and establishes HUF's identity. It must be notarized by a public lawyer to make it legally enforceable.
Please keep it safe and handy. The Income Tax Department can ask for it in case of any scrutiny.
Step 2. The HUF PAN card. Now to get this, you need to apply using Form 49A. Same process as you would do for an individual. The application goes in the Karta's name. For example, Karan Sharma HUF. The HUF deed is your main supporting document. Once the PAN is issued, HUF is a recognized taxpayer in the eyes of law. Step 3. A separate bank account in HUF's name. Every rupee flowing into and out of the HUF must move through this account. Keeping personal and HUF money in the same account is one of the most common reasons Income Tax Department questions the HUF structure. Keep it separate, always. So, if you are a salaried couple and assumed HUF is not for you, then hopefully this has changed that.
Video 2 is where we get into the actual numbers. How we personally funded our HUF, where the money is deployed, and how much taxes we are saving every year.
Subscribe to our channel so that you don't miss it. And if someone in your family is paying more taxes than they should, then share it with them. Bye.